And I want to start off today's podcast by talking about the precious metals. They had another spectacular week this week. We haven't quite finished the month yet. We got a couple more days next week to finish out the month of September and the third quarter. And in fact, I expect Monday and Tuesday to be strong days to finish out the quarter. I think a lot of portfolio managers are going to be scrambling to add some gold and silver and mining stocks to their portfolios just to window dress them up a bit for the quarter because they've been so strong. You kind of don't want to explain to your clients why you don't have anything in the metals market, why you don't have any exposure. So gold closed today at about 3,760. It sold off towards the end of the day. It was above 3780 going into the last hour. We kind of sold off at the back end of the day. But, the absolute high, though, was set on Tuesday. So gold hit its all-time record high earlier in the week on Tuesday. It didn't quite get up there today. It almost hit 3,800. It came less than $10, maybe even less than $5 from 3,800. Silver, however, just kept on chugging along, making new highs pretty much every day of the week. It closed this week above $46. And it traded intraday a new high going back for about, 14 years or so. It got to 46.50 and change on the day. Here are the numbers so far on gold and silver. Gold up about 0.5% on the day, 2.2% on the week, 9% so far in September, and 43% this year. Not for a year, but so far in 2025. Silver doing even better, up about 2% today, 8% on the week, 8% in 1 week, 17% in the month of September, and 59% so far for the year. 59%. Now, of course, I don't talk as much about the other precious metals, platinum and palladium, although I have been talking about platinum a little bit more over the past year. In fact, I came out on this podcast, if you recall, when gold was above 3,000 and platinum was below 1,000, and I made a strong pitch that my listeners go to Schiff Gold and buy platinum because I thought it was ridiculous that you could buy 3 ounces of platinum with a single ounce of gold. Platinum was up 3.3% today. It's up 12% this week, 19% on the month, and 74% year to date. 74. Palladium also not quite as good, but inching out gold. Palladium up 44% on the year. Now, these are not normal gains. And it's not like these gains are happening, at least for gold, at depressed levels, because we started the year at record highs. And now we're just adding to those record highs. Yes, I think platinum and silver were depressed in relation to gold, not necessarily in relation to their own history. Although silver, at $30 or wherever it was at the beginning of the year, was still cheap compared to where it had been in the past. But it wasn't anywhere near a record. Gold was at a record, and now it keeps setting new records. But this would not be happening if inflation were well contained. Right? If we really were headed back to 2% in 2 years, like the Fed claims, if inflation hadn't been beaten into submission the way Donald Trump claims. Every time he gives a speech now, whether it's at the UN or whether it's at Charlie Kirk's funeral, he talks about how inflation is dead and buried, right? How we've got the hottest economy in the world, it's the greatest economy in the world, and we've got no inflation. Well, if we really had no inflation, gold would not be doing this. Silver would not be doing this. So these are real world market indicators that there's a problem here, right? And that is inflation. These are inflation hedges. These precious metals are very sensitive to inflation expectations. People expect more inflation, they buy more gold and silver. So that's people voting with their feet, right? They're walking away from dollars and they're putting their money where my mouth is, and they're buying gold and silver. So this shows you that what Trump is trying to sell you and what the Federal Reserve is trying to con you into believing are not true. And when, by the way, talking about cons and, people trying to sell you a bill of goods, Bitcoin continues to drift lower. As I speak, it's barely holding 109,400. So it's been down on the week. Yes, it's still up on the year, but only 16%. That's not much when you're talking about 43% up in gold and 59% up in silver. It can't even beat Ethereum, which is up 20% on the year. But both of these tokens are being dramatically outperformed by physical precious metals. In fact, again, I've talked about this, and I'm going to keep talking about it because the Bitcoin community keeps ignoring it. But now Bitcoin is 22% below its August high last month, priced in gold. So in terms of gold, from where it was at its peak last month, Bitcoin is 22% lower. That is an official bear market. And in fact, if you go back to the Bitcoin peak of November of 2021, that's almost 4 full years ago. Bitcoin is 20% lower now than it was then. So despite all the hype, despite all the ETFs and the Bitcoin treasury companies and the first Bitcoin president and the strategic Bitcoin reserve and all the Super Bowl ads and everything that Wall Street has thrown at you and the Trump administration, Bitcoin is in a stealth bear market. And if Bitcoin is holding itself out as a digital version of gold, why is it in a bear market versus gold? And I think it's going to accelerate, right? I think that Bitcoin could get clobbered in Q4. It could end up finishing the year below 100,000. And gold could end up finishing the year above 4,000. Because I think we're going to see a lot of strength. One reason in particular, and I mentioned this on the Schiff Gold Market Wrap last week. And so make sure you go to the Schiff Gold YouTube channel and subscribe to that one so you can get the market wrap, because I got this news after I did my podcast here. So I didn't have it for this podcast, but I shared it with everybody at the Schiff Gold Market Wrap. But Morgan Stanley came out and tweaked the 60-40 portfolio. Now, this is a Wall Street bellwether portfolio. 60% stocks, 40% bonds, right? I mean, that's it. That's the portfolio. They tweak it a little bit. If you're really young, they might say, look, go 80% stocks and go 20% bonds. And if you're older, maybe go 60% bonds, 40% stocks, right? They tweak it depending on where you are, towards your retirement goals. But that's been the portfolio ever since I've been in this business. I got my license in 1987, coincidentally, the year the stock market crashed. That's when I became a stockbroker, the year the stock market crashed. So I didn't really enter the industry at the best time. Although in hindsight, it was a great time to buy, but it was, a difficult time because a lot of stockbrokers, were waiting tables, right? They lost their jobs because of the 87 stock market crash. But that's when I got into the business. But ever since then, it's been 60-40, right? Morgan Stanley said, you know what? We need to split that 40% that was in bonds 50-50 with gold. So Morgan Stanley came out and said our portfolio is 60-20-20. 60% stocks, 20% bonds, and 20% gold. Unbelievable. Now, it's about time. And the reason that Morgan Stanley is doing this is they're saying that we need an inflation hedge. And since stocks can also be viewed as an inflation hedge, although not all stocks are the same in that respect, but bonds are clearly the biggest victims of inflation, right? If you own bonds, inflation kills you. There is no hedge. And so Morgan Stanley said, look, we're going to have high inflation. Forget about 2%. That's old news. That's never happening again. And we're going to have high inflation. That's obvious. And so our clients need to hedge their bonds. So they need to buy gold. This is big. Not only is this a sell signal for bonds, because if you're a Morgan Stanley client and you got 40% of your portfolio in bonds and your advisor says, well, you got to go down to 20%, how do you do that? You got to sell half your bonds, right? It's a sell signal on bonds. A lot of those bonds are treasuries. So you have brokerage firms telling their clients to sell treasuries when the U.S. government has a record amount of treasuries that it needs to sell, right? Houston, we got a big problem here. But all the money coming out of bonds is going into gold. Now, again, the first time in my career as a stockbroker, major firms are recommending gold. Now, of course, I've been recommending gold the whole time. When gold was under $300 and I got my stockbroker license, I would tell people to buy gold, right? I was, the odd man out. Now, I'm still kind of the odd man, but I've got some company because it's just starting, right? This trend is going to envelop all of Wall Street, right? It's like a herd, right? People are afraid to go out on a limb, right? Nobody wants to be the first one to buy gold because then if it goes down, you look like a fool. Hey, why'd you buy that? Why'd you put my money in that rock? Why'd you buy these gold stocks, right? You're fired, right? People are afraid, right? But once somebody else does it and it works, and then somebody else does it and it works, now you got to do it. Because now if gold goes up, and it will go up, and the mining stocks go up and you don't own them, now your clients are going to say, hey, why didn't you have me in any gold? Why didn't you have me in any gold stocks? You're fired, right? So now the pressure is to put them in. So that's why I think we're going to see a massive run up between now and the end of the year, and probably between now and the end of the decade, as more people jump into the water, right? Because other people are there and they're swimming and they're having a great time, and you don't even have to, put your toe in. You could just jump right in now because everything is great. So this is what's going to happen, right? People need inflation hedges. Gold is now shown itself to be the inflation hedge. It's no longer going sideways, even though it never really was. I mean, it's way outperforming. The U.S. stock market is down 70% priced in gold in the last 25 years. And in fact, when you hear the financial news keep talking about Dow making a record high, no, it's not. It keeps going down. Year to date, the Dow is down, I don't know what, over 20, 25% this year. The Dow is getting killed in terms of real money, eviscerated. But you don't know that if you price it in funny money. And that's one of the reasons why Donald Trump wants inflation, so he can make it look like the stock market is going up, even though it's actually going down. See, everybody can feel richer because of inflation, even though they're getting poorer. Now, of course, if you don't have financial assets, you don't feel richer. You just are getting poorer, and you know it. And that's why a lot of people voted for Trump, because they were getting poorer. The problem is they're going to get even poorer now that they voted for Trump, right? Because all the problems they thought Trump was going to solve, he's going to make worse. And I'm going to get to that in a little bit. I want to continue talking about gold. But so you've got now Wall Street for the first time recommending gold stocks. So there's not going to be any big pullbacks. You just got to buy gold and silver because now we've got a lot of company. It's not just Peter Schiff's fans and a few other gold bugs that want to buy gold and silver, right? We got a lot of other people that want to buy, and there's not that much of it. The same thing with mining stocks. The GDX hit a new record high this week, not today, but earlier in the week, but it's up 120% on the year, 18% so far this month. 1 month. 1 month, the GDX is up more than the S&P was up all year. The GDXJ up 20% during the month of September. Again, we got 2 more days to be up. It's up 125% on the year. Now, Wall Street is not going to allow this to go unnoticed, especially, as it's getting close to the end of the year. These are the best performing stocks, and they're still cheap. These tech stocks that people are buying are expensive, and they're losing a ton of money, right? Money-losing stocks. People are buying. Gold companies are making a killing. They have huge earnings. The earnings are growing. So there's a lot of value here, but we also have momentum. So you have momentum and you have value. See, the tech stocks, they just have momentum, right? And that could collapse at any moment. But you've got a solid fundamental foundation behind what's happening in precious metals. So this is just going to continue. Next year could be even better than this year, even though this year is spectacular. But you got to buy, right? You can't just procrastinate anymore. You got to go to Schiff Gold, buy gold and silver. Don't forget, buy some platinum. It's still got a lot of upside. Get into these mining stocks. Buy my gold fund, which again, EPGIX is still lagging the GDX and GDXJ because we got a lot of private deals. We invested in private companies that aren't even public. And so we're carrying those investments at cost. Now, obviously, they're probably worth a lot more than that, but it's not reflected in our price because they're not public yet. They will go public, and then they could be worth a lot more than what we paid. And all of a sudden, they're going to be there. And we got warrants. We're carrying the warrants at zero, right? Warrants that are probably worth a lot of money, we're counting them as worthless. So we got a great portfolio in the Euro Pacific Gold Fund. Yeah, I think we're up over 100%, but not as high as these numbers because we own these stocks that are up that much, but we just own some other positions. And some of the smaller stocks that we think are, real sleepers, when they wake up, they're going to outperform all these big stocks. So it's a great time to be doing that. But a couple of other things that were said, I think that I mentioned on the Schiff Gold Market Wrap that were just so bullish for gold. You had Stephen Moran, who was the president's economic advisor, who's now sitting on the FOMC, right, as an insider for Trump. He was asked about the dollar, and he said, well, the Fed doesn't have a mandate on a strong dollar or any mandate on the dollar, right? We just have a mandate on price stability, right? Well, you're not going to have stable prices if you don't have a stable dollar because stable prices are about the purchasing power of the dollar. But if you have someone on the Fed saying, hey, we don't care about the dollar's value, what does that mean? Dollar's going down, right? And if they don't care about the value of the dollar, they're not going to achieve their inflation mandate because all inflation is a reflection of the purchasing power of the dollar. Now, maybe he was talking about just the exchange rate, but if the dollar buys fewer euros or fewer pounds or fewer any other currency, then everything that we import is going to be more expensive. And everything we make is going to get bid up by people who have those currencies and outbid us. So the exchange rate of the dollar is very important if you're trying to get price stability. And he basically couldn't care less about the dollar, which means it's going down. And also you have Steve Bannon, who was a big Trump guy at one time, but he was out there saying that the Secretary of the Treasury should also be the chairman of the Federal Reserve. That it should be that the same guy, right? Scott Bessent should wear both hats. That Donald Trump should nominate Scott Bessent to be chair of the Federal Reserve, but not have him resign as Secretary of the Treasury. I mean, this is really dangerous stuff. And in fact, today I heard that all of the living former FOMC chairs, and there's not that many. There's Greenspan, who's still alive, Bernanke, and Yellen, plus a number of former heads of the Council of Economic Advisors under both Democrat and Republican administrations. They're urging the Supreme Court not to let Donald Trump fire Lisa Cook. And I said on this podcast, there's a real chance that they're going to do it, not because he can with respect to an independent Fed. If the Fed is independent, he can't. But if they rule that an independent Fed is unconstitutional and the Fed must be beholden to an elected official, and that is the president, then the Supreme Court is going to validate the firing, but not only validate this firing, but any other filing motivated by whatever reason the president wants, and not just this president, but any future president. And I think in this case, these Fed chairs are right, even though I've criticized them pretty much the whole time they were in office. They're right on this point. A Fed controlled by the president is even worse than a Fed independently controlled by the chair and the board, even if they often work hand in glove. At least there was a pretense. if we drop the pretense, then the world's going to drop the dollar.